Hello there, welcome to Elisha FX. This is Kelvin Elisha Ziwa, and welcome to one of our trade breakdowns where I show you how I took a trade, when I took a trade, and why I took a trade. And so in today's market, we'll have the GBPJPY, and so stay tuned. We have our market here that is in a 1 hour time frame. As you can see, I'd already noted down the areas of interest that is in the higher time frames, like the 1 day time frame and the 4 hour time frame. That's why I noted down the areas of interest. And then next thing that you do in a higher time frame is also notice the direction of the market. Is it an uptrend? Is it a downtrend? Is it a consolidating market? So as you can see, our market here was making higher highs and higher lows, higher high, higher low, and then until it reached this point here where we had a change of character over here. This area of interest, as you can see, the moment it reached this area of interest, there was a resistance point. Let me just note down this resistance point. So there is a point that acted as resistance, a resistance where the market retested several times and it rejected. The market couldn't go further up. This point here, as you can see, as I'm noting down with this line, is our resistance point. So every time the market approached this point, it could go back all the way down to break through our area of interest, as you can see. So I would also note down a trend line. Yes, I trade trend line as well. So a trend line, a valid trend line, is where you have more than 3 touches testing a specific point. So as you can see, this trend line here, if I even extend it actually all the way to this part here, you can see that the market actually, the candles touched this trend line more than 3 times. I have noted down 4 times. So you can see the market came all the way up there. It bounced back. It came to the trend line. It retested the trend line. It went up, bounced back from the same resistance all the way until it finally broke. It broke through the trend line, as you can see here. This is where I found the market. The point, at this point where the market had broken the trend line that we have in the market. And so as a trader, I was waiting for a retracement to a point up there. Like, where exactly was I waiting for the retracement? So I was really looking at the retracement in the 15 minutes time frame. So I went back into a 15 minutes time frame in order to understand where exactly the market would retrace back to. So as you can see, let me just zoom in. Yeah. Okay. Yeah, so as you can see here, we had the market moving all the way down here, and there was a part here where we had a very bearish momentum, like which actually prompted the change of character. So as you can see, this part here, let me even show it with let me show it with this triangle. So this part here is what caused actually the change of character, where we had a very bearish momentum, like a strong bearish momentum that broke the previous low. And so that is where I'll be interested in having market retracing to before I can actually go short in this market. So I have noted down exactly where I'm expecting the market to go all the way. And as you can see, at this point here, this is where we had our candle, our support zone, supply zone rather, sorry. So yeah, we had our supply zone, which is that candle there, that bullish candle there that was formed just before the bearish momentum. So this candle here is our supply zone. As you can note, the green candle, the green area there is our supply zone. So meaning the market has to go all the way back there to that supply zone and retest it. Every time the market gets to that supply zone, we'll be looking at selling into the market, knowing very well that that's where the institutional sales will happen. Like institutional, by institutional I mean like the big markets like the banks and whatever. That's where they sold, and that's why we had that sharp movement to the downside. As simple as that. So the strategy itself, as you can notice by now, is that I use the supply and demand and supply strategy, and of course I incorporate that strategy with trend lines and of course resistance, break of structures and all that, the market structure in short. So as you can see, this part here is where we had the market break the previous low, as you can see here. So I'm noting down, and then we had also some liquidity down here. Let me note it down. So this liquidity here, if the market was to go up there, retest the supply zone, I'll be looking at the market going all the way down here and testing that liquidity that we have just drawn. You see that? So if I was to show the direction of the market, I'm expecting it to go all the way, touch this supply zone and go until it breaks this liquidity that is down here. As simple as that. I've noted down the area where the market has to retrace to, and then it will go all the way, break the previous low, and then also retest this liquidity that is here, as you can see. So yeah, so once we had if we were to show this here, if I was to show the position how I would enter this, I would enter exactly at this point where there is a supply zone, and then my stop loss will just be above that area of interest, and then my take profit will be at this liquidity that we have, the first liquidity here that we have. I will be waiting for the market to break this liquidity down here, as you can see. Now there is one thing you should note. So once I played the market, as you can see, once the market was played, before the market went all the way back to retest my entry zone there, which is the supply zone, the market actually already broke this liquidity where we were supposed to take profit from. You see that? So the market already retested this liquidity where we were supposed to take the profit from. So meaning once the market goes back to my entry point, it will have to come and break this again. So as you can see, once I play this, it went exactly into my entry zone, and once it retested the supply zone, as you can see, the market fell, like it went all the way down and broke that previous low or the previous liquidity that was created in the market. But it wasn't even so after that, you can see that it went all the way further until it retested the next liquidity, meaning it has broken this previous liquidity. As you can see, this liquidity is what was tested here. As simple as that. So we extended the take profit here for one simple reason, because where we had our take profit, the liquidity was already taken out before the market went to retest the supply zone, and so we extended our take profit all the way to down here. And as you can see, once we played the market even went further and retested the third liquidity down here that we had. As simple as that. So that's the strategy. That's the market I took. It went exactly like it was a sniper entry. It went exactly to my take profit, and it was about how many points? I think this is like, because this is like a 1 hour time frame, and you can just imagine all these points that were there. That was like more than 200 points, more than 100 rather. 100 points, about 150 somewhere points that we caught on this trade. As simple as that. So yeah, this is our market analysis. You just have to have a strategy. Like I said, this was me using the supply and demand strategy, but of course I incorporated the use of trend lines and the areas of interest, the resistance and support. As you can see, main thing is that you have to understand the direction of the market. That's the thing. And once you know the direction of the market, you will be able to tell, like once there is a change of character, you will know exactly where you are expecting to enter your trades. It's as simple as that. So thank you very much for watching. This is what I had for you today. And once again, subscribe, like and share the video for more. Thank you very much.